Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today we're diving into a report that might make you say, wait, did they really do that about a company's fundraising efforts? Let's get started. This report is called an 8K, which is basically a company's way of saying, hey, something important happened and we need to tell everyone right away. In this case, it involves Petros Pharmaceuticals, a company in the drug business. Scroll date of report, date of earliest event reported, BD dot non-numeric context, ref equals sign as of 2025-02-17 format equal ixt date month day, year A D equals sign fact 00001, 0 name equal day document period, end date February 17, 2025, CISD non-numeric CISD, BD CISD scroll. The key date here is February 17th, 2025. That's when things really started moving with this particular event. Fizz scroll. Item 1.01 entry into a material definitive agreement this scroll. The company got into an agreement that is very important with some investors to sell stocks and warrants. Think of warrants like coupons that allow you to buy stock later at a set price. They've entered what they are calling a purchase agreement with investors. This is the legal document that lays out all the details of the deal. They're doing something called a best efforts public offering, which means they're trying their hardest to sell these securities, but there's no guarantee they'll sell everything they're offering. The company is creating a unit, which is a package containing one share of common stock, plus two types of warrants, which are called Series A and Series B warrants. They plan to issue almost 14 million of these units. They also have pre-funded units. These units are similar, but instead of a regular share of stock, they include a special warrant that lets investors buy shares at a very low price up front. They will have close to 26 million of those. The price for each of the units is very low, less than 25 cents per unit, and a tiny fraction of a cent less for the pre-funded units. This is a strategy to attract investors. Its scroll exercise price of each of the Series A warrants and the Series B warrants is 48 cents per share of common stock. The warrants give the investors the right to buy the shares at 48 cents each. This price is higher than the price of the units, hoping that the stock value will increase in the future. The scroll warrants stockholder approval. The company has agreed to use its reasonable best efforts. The company needs to get approval from its stockholders to allow the warrants to be used to buy shares. If they don't get this approval, the investors can't use their warrants. The scroll pre-funded warrants are immediately exercisable and may be exercised at a nominal consideration of $0.0001 per shares the scroll. These pre-funded warrants let investors buy shares for almost nothing. The exercise price is only 1/10,000th of a dollar per share scroll. A holder will not have the right to exercise any portion of the warrants or the pre-funded warrants if the holder together with its affiliates would beneficially own in excess of 4.99% or 9.99%. So scroll. There is a limit on how many shares an investor can own after using the warrants. They can't own more than about 5% or 10% of the company's total shares, depending on the warrant type, unless they get special permission. This rule is in place to stop any single investor from gaining too much control. The scroll aggregate gross proceeds from the offering are approximately $9.6 million. So scroll in total, the company expects to receive about $9.6 million before paying for the expenses of the offering. The scroll intends to use the net proceeds from the offering for working capital and general corporate purposes. The company plans to use the money for everyday expenses and other general needs of the business. So scroll Dawson James Securities Inc. Dawson acted as the company's exclusive placement agent. The scroll. Dawson James Securities helped the company find investors for this offering. They acted as the placement agent. The company is paying Dawson a fee of 8% of the total money raised, plus they will also cover certain expenses and legal fees. The company filed paperwork with the Securities and Exchange Commission called a registration statement to legally offer these securities. This means that the company has provided a lot of information about themselves to the SEC and it is available for review. There were some additional events that the company wanted to report. That scroll closing of the offering, the company granted to each of Joshua N. Silverman, Bruce Tove Bernstein, Wayne R. Walker, Fady Bokta, Mitchell Arnold, and Robert Weinstein shares of restricted common stock. This scroll, the company gave shares of stock that have some restrictions to several executives. This is often done to reward them or encourage them to stay with the company. Scroll in the amount of 1,300,000, 150,000, 450,000, 150,000, 150,000, and 150,000 shares. This scroll. The amount of shares given ranged from 150,000 to 1 million shares, with Joshua Silverman receiving the most. Scroll. Press release dated February 18th, 2025. The scroll. The company also put out a press release to announce the pricing of this offering. So what does all of this mean? Petros Pharmaceuticals needed money and they raised it by selling units containing stock and warrants at a very low price. This can be a risky move because if the stock price doesn't go up, the warrants might not be worth much. Also, issuing so many new shares can dilute the value of the existing shares. On the positive side, they now have $9.6 million to fund their operations. It remains to be seen whether this offering will turn out to be a good move or not. Looking at this offering more broadly, it looks like Petros is struggling to raise capital at better terms. This is a red flag. Their reliance on such heavily discounted offerings suggests some financial weakness. The notable risk is the potential for significant dilution, which could hurt existing shareholders if the stock price doesn't increase enough to offset the new shares. Based on the company's current financial situation, it appears the stock is a bit risky, and a fair price range would be between 15 cents and 20 cents. In conclusion, Petros Pharmaceuticals' recent offering is a mixed bag. While it provides much needed capital, the terms are not particularly favorable and could create problems down the road. Therefore, I would lean towards a bearish outlook. Thanks for watching. If you found this analysis helpful, please like and subscribe for more corporate decoder videos.